It's a quiet Tuesday morning in January 2026. Margaret, a 68-year-old widow from Ohio, pours her coffee and sits down at the kitchen table. She opens her banking app, expecting to see her Social Security deposit a little bigger this month. After all, the news kept saying there was a 2.8% raise coming. But when she looks at the number, her heart sinks. The deposit is barely larger than last month. In fact, after she does the math, it looks like she got almost nothing extra. She feels that cold knot in her stomach. Did she do something wrong? Did someone steal part of her check? Is the government taking her money? She picks up the phone to call her daughter, her voice shaking. Honey, something is wrong with my Social Security. If you have ever felt that fear, that confusion, that helpless feeling of not understanding what just happened to your own money, please stay with me right now. Because what I am about to share could protect you, your spouse, and every senior you love. Hello, my name is Milena. I am a senior policy analyst, and for years I have helped retirees just like you understand the complicated rules that decide how much money lands in your bank account each month. Today I am going to walk you through the exact Social Security changes hitting in 2026, the ones that affect everyone born before 1966. I will show you the rules in plain English. I will tell you the steps you need to take. And I will give you the truth that most news channels are too busy to explain properly. And please stay until the very end, because there is one hidden mistake that millions of seniors are about to make this year. A mistake that could quietly cost you thousands of dollars, or even your benefits altogether. I will reveal it at the end of this video. Welcome to Silver Law and Money. Let's begin. Let me tell you about Robert. Robert is 67 years old. He worked for 42 years as a maintenance supervisor in Pennsylvania. He paid into Social Security every single paycheck. He did everything right. He filed his taxes on time. He never missed a bill. He was the kind of man who kept every receipt in a shoebox in the closet. In December 2025, Robert read in the newspaper that Social Security would go up 2.8% in January. He smiled. He told his wife, honey, we'll have a little extra for the grandkids this year. But when January arrived, the deposit was almost the same as before. Robert was confused. He thought maybe the bank made a mistake. He drove down to his local Social Security office and waited 2 hours just to speak to someone. The clerk looked at his account, then looked up gently and said, Robert, your raise is there, but your Medicare Part B premium also went up. That's why your check looks almost the same. Robert sat in his car in the parking lot, just staring at the steering wheel. He had no idea this could happen. Nobody warned him. Nobody told him to plan for it. And here is the heartbreaking part. Robert is not alone. Right now, millions of seniors across America are about to feel exactly what Robert felt. So let me explain clearly and calmly what is actually happening in 2026 and what you must do about it. Change number 1, the 2026 cost of living adjustment. Starting with the December 2025 benefit, which arrives in your account in January 2026, Social Security is going up 2.8%. The supplemental security income payments adjust first, on December 31st, 2025. For the average retired worker, that means the monthly check goes from about $2,015 to $2,071. That is roughly $56 more per month. For an aged widow living alone, it goes from $1,867 to $1,919. This sounds wonderful on paper. But here is the trap. The standard Medicare Part B premium is jumping from $185 a month to $202.90 a month. That is an increase of $17.90. And for most seniors, that premium is automatically deducted from your Social Security check before it ever reaches your bank. So if your raise was $56 and your Medicare premium ate $17.90 of it, your real raise is closer to $38. That is why your January deposit will feel so much smaller than the headlines promised. Now, there is a legal protection here. It is called the hold harmless provision, written into Section 1840I of the Social Security Act. It protects most current beneficiaries from seeing their net check actually drop because of a Medicare premium hike. But this protection does not apply to 3 groups. First, anyone who enrolls in Medicare for the very first time in 2026. Second, high-income beneficiaries who pay something called IRMAA. And third, anyone who does not have Part B deducted directly from their Social Security check. So if you are in one of those 3 groups, you will feel the full weight of that premium increase. Please, Plan your January budget with this in mind. Change number 2, the full retirement age trap. This is one of the biggest misunderstandings I see every single day. If you were born in 1960 or later, your full retirement age is exactly 67, not 66, not 66 and a half, exactly 67. If you were born in 1959, your full retirement age is 66 and 10 months. If you were born in 1958, it is 66 and 8 months. Now here is the painful truth. If you claim your benefits at age 62, you lock in a permanent reduction of up to 30% for the rest of your life. That reduction never goes away. And if you wait past your full retirement age, every year you delay until age 70 earns you an extra 8%. That is one of the best guaranteed returns in the entire financial world. But here's the trap that catches so many people. Folks born between 1960 and 1965 still believe their full retirement age is 66 because that was the rule for their older siblings and friends. So they file at 66 thinking they're getting the full amount, and they accidentally lock in a permanent reduction of around 6.7%. If this just happened to you, do not panic. There is a legal protection. It is called Form SSA-521, the request for withdrawal of application. It gives you a one-time do-over, but only within 12 months of your first claim, and only if you pay back every dollar you received, including any Medicare premiums that were withheld. Another option, if you have already reached your full retirement age, is to voluntarily suspend your benefits. You don't have to pay anything back. You simply pause them, and you keep earning that 8% delayed credit each year until age 70. Please, before you file for Social Security, talk to a qualified advisor or call SSA directly. A wrong filing month can cost you tens of thousands of dollars over your lifetime, and it also lowers what your surviving spouse will receive after you are gone. Change number 3, the earnings test for those still working. Maybe you are 64 years old. Maybe you are still working part-time at the hardware store, or driving for a delivery service, or doing some consulting on the side. And maybe you are also collecting Social Security. Here is what changes in 2026. If you are under your full retirement age for the entire year, Social Security will withhold $1 of benefits for every $2 you earn above $24,480 a year. That is $2,040 a month. In the year you reach your full retirement age, the rule eases up. They withhold $1 for every $3 you earn above $65,160, and they only count what you earn in the months before your birthday. And here's the wonderful part. Starting the month you reach full retirement age, there is no limit at all. You can earn $1 million, and they will not touch a single penny of your Social Security. Now please listen carefully. The money they withhold is not lost. I repeat, it is not gone. When you reach your full retirement age, Social Security recalculates your monthly benefit upward to pay you back over time. So if you had benefits withheld, you will eventually get that money back through a higher monthly check for the rest of your life. And one more thing. Only earned wages and self-employment income count toward this test. Your pension does not count. Your IRA or 401k withdrawals do not count. Your dividends, your interest, your rental income, none of it counts. So please do not be afraid to keep working if you want to. Change number 4, the new $6,000 senior bonus deduction. This is one of the biggest tax changes for seniors in decades, and most people have no idea it exists. Under the One Big Beautiful Bill Act, signed into law in July of 2025, every taxpayer who is age 65 or older by the end of the tax year can claim an extra $6,000 deduction on their federal taxes. For a married couple where both spouses are 65 or older, that is $12,000. This deduction applies to tax years 2025 through 2028. It is on top of your regular standard deduction. It is on top of the existing extra deduction for seniors. To get the full amount, your modified adjusted gross income must be at or below $75,000 for a single filer, or $150,000 for a married couple filing jointly. It phases out completely at $175,000 for singles and $250,000 for joint filers. Now please hear me on this. You may have seen headlines that say Social Security is no longer taxed. That is not true. The old rules under Tax Code Section 86 are still in place. Up to 85% of your Social Security can still be taxable, depending on your provisional income. What this new deduction does is lower your taxable income, which may indirectly reduce or even eliminate the tax on your Social Security benefits for many middle-income retirees. But wealthier retirees will still owe tax. And remember, This deduction expires after 2028 unless Congress extends it. Here is the warning. If you assume your benefits are now tax-free and you stop your withholding, you could be hit with an underpayment penalty when you file in April 2027. Be careful. Talk to your tax preparer this year. And one more thing. To claim this deduction as a married couple, you must file jointly. If you file separately, you lose it. Change number 5. Medicare Part B, IRMAA, and the late enrollment penalty. The standard Medicare Part B premium in 2026 is $202.90 a month. The annual deductible is $283. But if your income from 2 years ago, meaning your 2024 tax return, was above $106,000 for a single filer or $212,000 for a married couple, you will pay an extra surcharge called IRMAA. With that surcharge, your monthly premium can range anywhere from $284 all the way up to $689.90. So if you sold a house in 2024, or did a large Roth conversion, or took a big withdrawal from an IRA, that 1-year spike can push you into a much higher Medicare premium bracket in 2026. The good news is there is a legal protection. It is called Form SSA 44. If you had a life-changing event such as marriage, divorce, the death of a spouse, retirement, a reduction in work hours, or the loss of pension income, you can ask Social Security to recalculate your IRMAA based on your current situation. Most people have no idea this form exists. And please listen to this next part. The Medicare Part B late enrollment penalty is permanent. It lasts for the rest of your life. For every full 12 months, you were eligible for Part B, but did not enroll, your premium goes up 10% forever. So if you delayed 3 years without creditable employer coverage, you are paying 30% more every month for as long as you live. That could easily be $60 or more extra every single month for the rest of your life. The only way to avoid this penalty is to enroll on time, or to qualify for a special enrollment period, because you were covered under a current employer's group health plan. Change number 6. The new login system for Social Security Online. Social Security has retired its old username and password system. As of 2026, when you want to log into your My Social Security account, you must use either login.gov or id.me. If you have not set up your online account yet, please do it soon, because criminals are out there right now trying to create accounts in other people's names so they can change direct deposit information and steal your monthly check. And let me be absolutely clear about something. Social Security will never call you and threaten to suspend your Social Security number. They do not do that. They never demand payment in gift cards, wire transfers, or cryptocurrency. If you ever get a call like that, hang up immediately. The real Social Security number is 1-800-77-21213. To report fraud, call the Office of the Inspector General at 1-800-269-0271 or visit oig.ssa.gov. Now here are the 3 exact steps every senior born before 1966 must take in 2026. Step 1. Create or verify your My Social Security account today. Go directly to ssa.gov. Do not click on links from emails or text messages. Set up your login.gov or id.me access. This single step protects you from imposters who could try to reroute your benefits. Step 2. Before you make any major change, whether that is filing for benefits, changing direct deposit, dropping a Medicare plan, or stopping your tax withholding, call Social Security directly at 1-800-77-21213 or speak to a licensed professional. One phone call can save you from a permanent, lifelong mistake. Step 3. Keep paper copies of everything, every benefit award letter, every Medicare summary notice, every tax return, every pension statement. Put them in a folder. Tell your spouse and your adult children exactly where that folder is. If there is ever a dispute, a denial, or a fraud attempt, those documents are your protection. Now, I promised you the hidden mistake at the end. Here it is. The biggest mistake seniors are making in 2026 is assuming that someone else is watching over their benefits. They assume Social Security will notice if there is a problem. They assume Medicare will tell them when premiums change. They assume the IRS will warn them before they owe money. That is not how it works. Nobody is watching out for you the way you watch out for yourself. The government sends letters, but those letters are written in dense legal language. The news talks about the COLA, but they don't explain how Medicare eats into it. The mailings about Irma arrive in plain white envelopes that look like junk mail. You must be your own advocate. You must check your own statements. You must read your own award letters. Because one missed letter, one ignored notice, one assumption that it will work itself out can cost you thousands of dollars or even your benefits. So please do not rely only on YouTube notifications to keep you informed. YouTube notifications fail. Algorithms change. Channels get suppressed. Bookmark SSA.gov, Medicare.gov, and IRS.gov. Visit them every few months. Read the letters that come in the mail. Open every envelope. And please share this video with your spouse, your siblings, your parents, and every senior you love. Because the one rule we all need to remember is this: information shared is money saved. I am Milena, and this has been Silver Law and Money. Take care of yourself, take care of each other, and I will see you in the next video.